I really want to talk about a subject I haven't found on the internet and I thought would be absolutely pertinent for loan originators looking to do and grow more loans in 2025, right? Because that's always the objective. One of the things I pulled this report from March 31st, 2025, just a short period ago, about the outstanding interest rates, the rates on outstanding mortgages that people have by percentage. But what I mean by this, of all the mortgages out there, 33%, the interest rate is 3% to 3.9%. The next biggest pool was the 3% or less was 21% of all outstanding mortgages. Because what's happening is that the narrative is that rates are going to drop, rates are going to improve, and your business is going to come back to this descending yield curve where rates are consistently dropping down. And I'm here to break it to you from what I'm seeing is those days might have a small improvement, but I don't see a big improvement with rates coming. But I do have a niche that I think is worth paying attention to that could help you impact the business. Because if you've been watching the news, you saw that Zillow bought Redfin. If you've been watching the news, you saw Rocket bought Mr. Cooper. All of these are things that I call the noise category because if you're hyper local, focused on service, meeting customers where they're at, available around the clock and can close quickly, that's just noise and shouldn't impact your business because there's another action that you can take that makes a huge difference that can bring you some new loans today. So here's the next stat, and you'll see this in the graphics we're about to show you, is that credit card debt hit an all-time high at $1.21 trillion. So remember this, people have low rates on outstanding mortgages, but credit card debt's shooting through the roof. And so as you think about this, you're like, so what are you saying here, John? And what I'm saying is this. Some people's housing expense might be locked in and low, but all the other expenses they have are going through the roof, and that's why they're using credit cards. Because one of the things you have to remind yourself if you're a loan originator is that paying your clients when they pay off debt, it's like a pay raise. So what they have to think about is what can they do to put themselves in a better spot and where can they get lower cost funds than this credit cards or personal loans, which we all know is in the double digit range. And in some cases, upwards of 28% interest rate for those credit cards. Because this next data point that I want to cover here today is about home prices increases since the beginning of 2019. Because what's insane is that we're in Indianapolis, Indiana, and since 2019, and this will blow your mind, home prices in Indiana have gone up 48%. So if you're watching this video and you're not a mortgage originator, you say, John, it's a terrible thing. That doesn't help me. But what you got to remember is you can't watch content that doesn't help you get what you want to do. So if you're a loan originator, what are you thinking here where I'm going? It means this. People have more equity in their home and that equity is trapped. So their best thinking is use credit cards and other forms of debt in order to cash flow their lifestyle. A lot of people want to block off that noise of that Dave Ramsey voice of, hey, pay off your debt and live beneath your means and save your money.
No, there's not any question. You're broke and you're living with your parents. Don't worry about investing and don't start your 401k. You're broke and in debt. No, you're broke. You are broke and in debt.
So what they're doing is they're keeping the low rate for their payment and then they're taking out debt for everything else. Because what's this really data mean if I summarize it for you as I just kind of talk about paying off debt is that consumer debt's rising, home equity is increasing, and the next wave of opportunity is going to come from timed out, educationally based refinances for your borrowers. Because what you have to remember when you counsel someone about their personal finances when it comes to your mortgages, people don't just say, oh, my housing expense low, right? They don't look at that singularly. They look at all their debt in one big lump. So effectively cashing out a refi and paying off all their debt can be a net savings. That's the opportunity with this. Take the educational approach to coach and train them up by looking at their total picture of debt. Because paying off debt's a pay raise, refinancing debt drops the interest, and then you can coach them up about, hey, create a budget where you don't need debt to pay your bills. Because Dave Ramsey has a proven method of baby steps 1 through 7 to set yourself up. And I don't want to talk about that on a video. But what I want you to think about is where is the opportunity if you're a loan originator? It's calling your clients, even with the low rates, and saying, hey, I get your rates are low, but I want to talk about your whole financial picture. Because again, every single thing is still a bill that needs to be paid, whether the rate is high or low. Follow me here. So where I'm going with this is that what I'm really tempering with this is the next piece of data. Loan refinance volume, rate and term, went up 95.71% in March of last month because rates improved. So the customer base, there might be less people refinancing, but there's a whole lot of people looking to save money. So as you think about your customers, who are those people you need to reach out to and give counsel? Who are those people you need to reach out to and educate and say, hey, let's set you up for when rates improve to take advantage of it to save you money? Because the American people are not good at saving money.
Honey, you're broke.
They need someone to come in their life like you to engage them where they're at and explain why this is how you can take advantage of the market. So here's the thing about refis that nobody wants to really say is this when we look to the future. Nobody knows what the heck is going to happen with rates. The chart before you that you're going to see is it asks the major industries in real estate. It asks real estate agents. It asks the mortgage industry. It asks home builders. It asks single family investors. And it also asks landlords, U.S. adults. Everyone thinks rates are going to improve. Here's the big asterisk that everyone should start thinking about. What if they don't? What if rates don't improve a lot? What's going to be your plan as an originator to help these customers who might have a ton of equity, but a lot of debt? You have to follow up and pay it forward. You need to be a consultant. And the best people and the best salespeople can tell you why it makes sense to refi and why it makes sense not to refi. Your customers will know if you're calling them just to make a sale. Follow me there. They will feel it. But if you're there paying it forward and educating them by looking at the data I'm providing for you today in this video, you should realize pretty quick that the customers who need it need your advice, need your guidance, need your leadership to say, hey, here's the plan I would do. Let's set you up to refi when rates improve or if they improve. But in the meantime, let's look at where can we cut back? What are the things we can do to cut your monthly bills to lower that price? Because one of the things I'll say, if you're a veteran originator right now, you're kind of beat up. You're over it. You're tired. You don't want to work nights and weekends. And what that really stems from is this mentality that you deserve something that unfortunately you don't. Because do you remember when you first got started in this business? Do you remember your first application? I bet you were so excited to get that app, no matter what time of day, that you would do whatever it takes to give that customer a great experience, no matter what. But over the last couple of years as an originator, people have gotten frustrated. They've gotten entitled. They've said, what's the point of all this stuff? I'm not going to make any money. There's not enough business to go around. And those are the very people that have quit. So if you're still watching this video right now, I hope you're somebody who realizes the opportunity to be a top producing loan originator is alive and well. So think about that. So lastly, as we talk through rates improving and what I see happening is that for literally the last 20 years, rates have been on a descending yield curve. What I call that is that when rates are descending, that means they were higher and they kept going down, down, and down. So there was plenty of originators who made a full career, all based upon refinances. Since those cut off, a lot of those people have gotten out of the business. So now as we have these higher rate periods, there'll be periods where rates go down, and that's where it's your time to act. So if you're watching this, you need to start writing down, John, what are the action items I need to take based upon these market conditions? Number one, always focus on purchases. Remember, the best businesses are built in tough economic times because true success comes from being resourceful, not having all the resources. It comes from that person who says, I'll find a way versus that person who says, why am I even trying? So as you look at this graph, realize as rates have gone up, that creates a monumental opportunity for originators who are willing to outlast, outwork, and stay positive and keep in the game. Because as you think through and closing out 2025, remember this, the job doesn't get easier, you get better. Your confidence comes from keeping your word to yourself. So what do I mean by that? All those action items I gave you in this video, you should have a running list of things you're going to implement and do today. Because it's the action taker who wins. It's not the person who feels better. It's not the person who thinks better. It's not even the person who's the long-tenured resume in the business. It's the person who captures the opportunity that's available to us every single day. So if you made it to the end of the video, like and subscribe this because we're going to be pushing out a lot of specific content to mortgage originators that are actionable items that give you new perspective and hopefully some more hope and motivation to take action and build that business you want today.